All right. Good morning, everybody. Hope you're having yourselves a fantastic start to your Tuesday. Happy futures roll day, hopefully being over and done with here today. And yeah, we can kind of go from there. Uh, just sorry about the little bit delay. Been playing around with like a I don't know what you want to call it. Like an alternative to the Bloomberg terminal. If you've ever worked, institutionally or whatever, Bloomberg terminal is like a news aggregator, charting platform. Has a bunch of studies, all that kind of stuff. And there's one that I discovered yesterday that's allegedly like a little bit of an alternative for it, for more like the research side of things. So it's a very good like aggregator of data and information, and you can run a bunch of back tests and reports. So might play around with that a little bit here. It's called Godel. And so yeah, pretty interesting, and significantly cheaper than the 20 grand or whatever it is that Bloomberg costs every year. But that's neither here nor there. So yeah, we'll play around with that a little bit, and we'll see if things sort of creep up. I guess the primary thing for us to talk about here is obviously the futures roll and what appears to be a pretty massive gap up, right? So this gapping up like this kind of tells us that the futures roll has occurred. This is the spread, right, between the previous contract, so the September contract, and now the December contract. And that's obviously going to be shown in the ES1 or NQ1 or CL1 charts, simply because, right, we do get that reflection of data, and these are continuous. Now, in your settings, you can turn off the continuous gap up or gap down. I personally... you guys were spot on. I was on mute on Discord. Sorry. But yeah, we've got a gap up here on the indexes simply because of the futures roll, right? So switching from one contract to the other. So the spread is now reflected on the continuous chart, right? Which is ES1 and Q1, yada, yada, yada. So hopefully, right, that does create a little bit of a smoother trading day for us, and we can kind of get back to relying on the data effectively that we are in charge of, I guess. So yeah, curious to see how the day shapes up, where momentum kind of comes to play, and then hopefully we can put ourselves in a good situation and then go from there. So yeah, good morning, everybody. Hope you're having a great morning, and let's get after it. So we do have some data here today at 10 a.m. Business inventories and the housing index. I don't think that'll be huge, but worth keeping an eye out on it. I think we're probably going to be maybe a little bit like data drunk while we still wait for tomorrow's FOMC. So let's see how things kind of come together. It's been a market that wants to go up effectively, right? Last little bit. So 1, 2, 3, 4, 5, now 6 out of the last 7 days have been green. Maybe a little bit frothy here at this point. So let's see if we can get a little bit of oomph out of this here today, and hopefully some nice enthusiasm. So as a starting point, right, we're now adjusting for December prices, and we're going to be targeting a move towards 6,700. That's going to be our starting point here. And then we're going to go like maybe 6750 is kind of our benchmark there. We go 6710, 720. Cool. And then to the downside, we're looking for a crack towards 70, so 6670. And then down towards, we'll say 20, let's say 6600. Cool. No, you shouldn't have to, Michael. As for the futures roll, so ES1 is always going to be showing you the forward contract. That means that it should be showing the December contract here now. There might be a few times where we potentially have to switch to the December chart specifically. Potentially in your prop firm execution, that might be something. If that is the case, you just have to type in ESZ or NQZ or CLV for the correct monthly code. If you just go on your trading view and click here, it'll tell you as well, right? So we went from September to December. So December is now what we're trading, which should be what's reflected on our screen here now, which is why we're gapping up, or like why this gap exists. But if it goes back to the September prices, we'll just trade that manually. All right. Forgot to do the count here. We'll call that a 2 out of 3 to the upside. Volume. Okay, same thing here. Targeting 24/7. Okay, and then we'll go 24/9. 25,000, crazy. And then to the downside here, 24/5. All right. CL. So obviously pretty weak volume there on that inside bar. And so we're above 64. We wanted to see that clear there yesterday. We are getting that here now. So I would say ORB fake out and hold of 64. Then break out towards no longer mean reversion. And we'd be targeting, 64.50, right, would be the starting point there. To the downside, we're then looking 63, although I'd probably just want to see this maybe fail more aggressively. We'll see. I'm not super optimistic about CL this morning. All right, Apple, obviously indecision, doji. So red candle, decreasing volume, gap up, 1 for 3. Tesla, red candle, decreasing volume, gap up. I guess technically a 1 for 3. Okay, Microsoft, green candle, decreasing volume, gap down, 6-cent gap down. So we'll call that a 1 for 3. Again, there, right? That indecision going into FOMC and with the futures roll makes a lot of sense, right? So contextually, all these things are pretty reasonable here. Call this a week 2 out of 3 without. NVIDIA 2 out of 3 with volume. Okay, AMD 2 out of 3 without. Meta 3 for 3, kind of a bit of a fake out. Netflix 2 out of 3 without. Google 3 for 3 to the upside. Beast Google. And then Vixaruni 15.67. So pretty interesting, right? With potentially where we're at here this morning. And yeah, hopefully we can get ourselves a nice trading day going here today. So any questions here, team? Anything you guys want to go over? How's everyone feeling today? All right, beautiful. So we got about 4 minutes here till market open. I'm gonna go pour myself a cup of coffee, drain my sinuses here quickly, and then jump back on in a minute or two. So I'll chat to you guys in a second. Hey, SW, Chan White. So I would recommend going through the start here section of the Discord. It'll explain to you a lot of the terms that I use so that you're prepared and are able to trade with us well. Just to answer your question, though, ORB stands for opening range breakout, and ATH stands for all time highs. Um, so asking about the after hours gap ups, this is reflecting the change in contract, right? So when you roll from one contract to the next, there is a spread between the two, and as you start to go now from trading the September contract to now the forward contract of December, ES1 is going to reflect that change. If we were to go into ESZ, for example, right? So the December contract specifically, you don't see that gap up because it's always been this contract. So this is just only occurs because ES1 is a continuous contract, but it's that gap up is chart only. It's not 300 points in reality. All right. Oh. So let's get after it here today, team. I think while I was muted, I was talking a little bit about how I am testing like a new, calling it like a Bloomberg alternative, a Bloomberg terminal alternative. So it looks really interesting for like researching and like seeing data drop and things along those lines. Much cheaper than a Bloomberg terminal, much uglier than a Bloomberg terminal, but certainly seems like it could be interesting eventually. So we'll keep playing around with that a little bit over the next day or so. See if it's actually worth the squeeze. Yeah, let's see how the market shapes up here today. And let's go from there. So right away, right, we can see watch list price, right, and actual price here on NQ is significantly different, right? Here it's 24,340. Here it's 24,581. So on certain time frames, we appear to be seeing the September contract, and on other time frames, we see the December. So what we're gonna have to do here today is just trade or view the December contract specifically. Not really a big deal. We'll type in NQZ. It'll only be for 1 day, so please don't panic. The ESZ, and that's it, right? So we'll just keep an eye on these two here today. And let's see how things shake up. And it won't make a difference on like our 3-man or 5-man or whatever. All things considered, probably still not expecting today to be like the busiest of trading days. If anything, today is going to be maybe like a positioning day versus necessarily a trend day. I think we're going to struggle to get trending price action going into tomorrow's FOMC. It's more, I think, of a positioning day here. But let's see. Relatively indecisive open, relatively tight range. We know historically NQ likes to be 30 points or higher. Even 30 is pretty low. So let's see how this thing kind of creeps up or comes together if it wants to. Yeah, 23 points, very, very small opening range. Everyone understand what tickers we're looking at here today? Everyone understand? Very important. So I'm not going to answer. If you see a spread when we're taking a trade, guys, I'm not going to answer that question. So all you got to do, John, right, is you got to type in NQZ, right, or ESZ. That clear? How would you search up any ticker at any time? Right, you just go left-hand corner, type it in, right? Okay, so overreaction on NQ versus ES, right? Bigger sell-off on NQ. That 5-min opening range looks a little bit more reasonable. 40 points is a bit more what you'd expect, right? From a range, I would say. Well, it means you're probably typing in something incorrect, Michaela, right, guys? So let's just watch me do it, right? Like this should be really basic. So symbol search. all is typed in, right? Or it clicked, then I type in NQZ. Then I click futures. And if I expand this, it'll show me NQZ 2025, December 2025. Click that. And now I have the correct contract. Different time frames, Chris. So the 3-min has that 23.5 as if you're describing. The 5-min time frame is 41.5. So different time frame will have a different opening range. Again, I would recommend that you review the videos in the Start Here channel as they break down a lot of these concepts, and you can get those questions answered way before you ever join the stream. All right, so we're going to be very, very patient, right? Good volume on the first candle, kind of disappears almost instantly on the second. Maybe we can get increasing volume here. It seems probably a little bit unlikely. It looks like it'll be a close, but no cigar. Yes, Chris, I did answer about the ORB and ATH. Again, I would recommend going through the start here section of the Discord as it does explain those terms in detail and what they are. The ORB stands for opening range breakout, which is the core strategy that I trade. And ATH is a term for all time highs. Again, guys, right? We need to really control the level of preparation. There's a lot of resources available to you all. The channel in Discord is called Start Here for a reason. And I would really recommend you guys watch that and go through those videos. They will make it a lot more likely that you're going to do very well here. And skipping those basic steps, time when you started does not give you an excuse over to not do the preparation, right? That excuse holds no water. So started yesterday means you had 12 hours before today's stream to be able to review 5 videos. Say this all the time, guys, but showing up is not enough. There's some increasing volume. $42. So we got like 18 minutes before data drops here. Still got a bit of time. Would have to be pullback technique. Wouldn't be able to do aggressive. And reference price would be like 680. I do want to watch for a little bit because I don't like the divergence between ES and NQ. So probably like I'm listening to my heart of hearts here. It's probably going to fake me out before it makes a move. So I'm being very patient here. I don't even have my order set up yet. I want to see this thing fake out or at least see bulls fail across the board prior to being aggressive. I don't have that narrative here yet. Again, still waiting. NQ's not really budging from that 565 area, so I'm still going to have to remain cautious and patient here. The move to the downside isn't worth the squeeze unless I can get an appropriate enough pullback. Now, we are starting to see maybe a little bit of a crack here on NQ, which would be very positive. Maybe a little bit more relative space to trade with, but not by a ton. As for using the aggressive technique, I can't really do that here, and I don't know if I really want to. I would still want to use the pullback technique 15 minutes before data. It's a long time. Okay, again, we've got some volume here. Now, target wise, we'll probably be going 500, not this 529. But let's see if we can get a close basically under there. Yesterday, 550 was a pretty important area. Let's see if that story kind of rhymes a bit today. Okay, 20 seconds. Oh, that's a sneaky close. $12 here still. So stop would have to be 571-ish. Reference price here would be 560. Again, I want to be maybe a little bit cautious here. There's kind of a part of me that wants to do that as a stop loss. Keeps getting stuffed. All right, so I'm going to start to set up my order a little bit here. Again, guys, right? NQZ futures December contract, right? So stop loss would be 578. And it'd be a one contract play. And let's watch around this 565 area. Now we still got a minute left on this candle. And although I have everything set up for this short, I'm not going to be super aggressive in clicking submit here. So I'm trying to buy myself time, basically. If I can let this candle close, maybe even fake out, there's no harm. I've not missed this move here yet. We have a little bit of a natural time clock on this, right? So there's almost like a bit of an expectation that we won't necessarily move a ton going into 10 a.m. data. I'm trying to get the best possible entry I can get versus the first entry I can get. So still nothing here. Hasn't gone above my reference price. That was something. All right, let's reset this. Very like it's a bit of a fake pop though, right? Because the enthusiasm that sold off for the 20 points would make you think that's going to have some more follow through, and then it just stalls out, right? So what that looks like to me in hindsight here is someone slapped a bunch of selling market orders to basically roll their position, and they just completely evaporated whatever was on the order book. Bit unlucky, but that's okay. Pretty rare we see those types of pops without it faking us out and stopping us out first. Kind of feels like every time we see that, we get stopped out first. I talked about this a bunch yesterday, but yesterday I didn't expect it to necessarily be a trading day. Today, maybe a little bit more likely, but I still wouldn't want to be super aggressive. This setting up as a possible reversal would be interesting. Hmm. Fake out lower off the opening range, 2x target, giving us approximately one handle moves from the lows, 50 points. And I'd probably want my stop loss to just be low of day. Maybe look like something like that. So let's see. Again, base expectation here. Starting point I'm taking on every single trade, right, is it's going to be a fake out until proven otherwise. Right? To say that I have trust issues is probably generous. And this time it would be a long, right? We'd be looking for a long based off of this reversal. 5 minutes till data. It's a little bit of time, but not a tremendous amount of it. Okay, so starting to watch here, right? Like I said, base expectation is fake out until proven otherwise. So like, although it's, flirting around my reference price. I'm still not really in a rush to click submit. Okay, so again, watching here. Last time, right? It was like last 2-3 seconds of the candle where we saw the big pop happen. Let's see if that happens again here. And guys, base expectation, fake out until proven otherwise. Very low volume, lowest volume of the day. Kind of still feel like a lower low is coming. Yep. Okay, there it is. So there's the trap, right? So now it'd be 5, 2, 3. Okay, guys, I am in average price 531.25. 531.25. Let's see if this thing can go. There it goes. So far, so good. Pretty much a perfect entry. Fantastic. So we got not a ton of time left in this. So now the focus, right, is on closing as P&L is increasing here. Okay, 30 seconds till data. Now, I'm not expecting the data to be necessarily a huge mover and shaker, but I don't want to get stuck in a headline. So let's see if we can maybe find an exit here. Hey guys, I am out. Exit price 539. Exit price 539. Good decision. And I literally was just watching the clock. Once it was 5 seconds, I was out. And if this thing sets up, we'll try again, right? Not really a big deal. We have effectively the same setup here on the 5-minute time frame. Everyone should have been green on that had we held through. maybe could have been a bit more, but that's fine. I'll take like $350. That's a good start to the morning here. And what I really liked about that trade was just how deliberate the plan was, right? We knew that we were looking for the fake out first. We wanted to see that failure happen. Once it did, and yeah, I can go from there. Hey, look, guys, I want you to all be very clear with yourselves, right? I don't want you to like obsess over trying to get a better entry than me or the same entry as me or whatever. That's kind of like a little bit of an element of luck of just clicking the button at the same time, right? Being on the same wavelength, yada yada yada. When I'm placing a trade, all I'm looking for is did I get a better entry than reference price or a worse entry? So if I got my reference price here at 535, all I'm trying to do is get the best possible entry I can under that blue line. That's my only thought, right? So if you're waiting for me to say that I am in and then you're clicking submit, that 1 or 2 second difference could lead to a very different price, right? So if you're chasing my entry effectively that way, you're never going to hit the same price because price moves, right? It's dynamic, it's changing all the time. So the only thing that I am thinking about when it's go time is I'm looking to try to buy as big of a discount relative to that blue line. An entry better than the blue line, good entry. An entry above that blue line, bad entry. It's that binary, right? So I want you guys to think that way too, because that's how I'm approaching it. And trying to chase my entries, although that's like a good idea in practice, what I think it does is it kind of hides from you the technique that you actually should be improving, right? You're probably going to make more money improving your own entry technique than trying to get faster at copying me, if that makes sense, right? So the delayed gratification is in basically gamifying that process for yourselves. And I would highly recommend doing that. Nice work, Ghost. Nice little win. That makes sense, everybody? Like just the nature of being in the live stream, like you can copy within a certain element, right? But between me saying something and you executing something, that time difference is going to ensure that we're not always copying each other, right? And there's no like workaround for that. So that your only alternative is to try to have the same effectively like entry technique that I'm doing, right? That's the only way to be able to generate that consistent entry. So that would be the thing to focus on. Not can I beat Michael? It's can I beat the blue line? Right? Because that's all I'm thinking about too. And we've done a pretty good job not holding on to this. This would have been a bag shit trade. I'll take it. Some money to start the day off. Can't really complain. The only way, Tony, right, that you're going to work through those trust issues is if you make it your own, right? Anxiety in a trade comes when you start to get questions or answers to questions that you didn't know you needed to have asked. So the only way, right, is to go from there. So there's probably some sort of mechanic that TradingView has or their order window has, right? That when you click submit, it's probably looking at ticks every uh whatever X amount of milliseconds or X seconds or whatever it is. And so then it probably rounds you to the nearest price based on what that was, if that makes sense, right? Yeah, sounds like you probably got one or two ticks difference on your perceived entry, but still significantly better than 250. Like you still have a 25% discount. That's pretty good. TradingView can be. I'm annoyed that they don't invest in their data infrastructure more because it can be super laggy and super annoying. Kind of drives me nuts sometimes. Like that didn't need to take as long as it just did. That should have been instant. My computer's strong enough. All right, one sec here, guys. Excuse me. All right, sorry, I'm back. Again, don't like the divergence between ES and NQ. That maybe makes me a little bit uncomfortable. Like kind of a weird sell-off day so far. It looks scarier than it actually is, or looks worse than it actually is. That's very interesting. On ES, we'd be targeting 660. And I kind of want to see bulls fail in their attempt to reclaim control here first. And then once they fail, sorry, I knew a cough was coming. once I see bulls fail, then I can maybe be a little bit more convinced, right, by a narrative being in play or not. Patience for me is going to be the name of the game. I talked about this a little bit yesterday, and I probably didn't touch on it in as much detail as I probably could have. But I talked about how basically it's just been like my stop loss location that I feel has maybe been wrong on a lot of my trades, not necessarily my thesis. Like I've effectively just gotten faked out, right, on a lot of my positions, which is fine. It's part of the game. But I guess like the thought that was rattling around in my COVID induced brain, so I don't know if that makes a ton of sense, um, was that if I like was a little bit, I'm trying to phrase this the right way so I don't sound like an impulsive freak. Um, but if my filter basically on when I choose to use the aggressive entry technique versus the pullback entry technique was a little bit wider, I think that I could probably avoid getting faked out on a lot of my trades. So almost like what I've been doing in the past, right, is my stop loss has been, or my entry technique and stop loss technique have been binary, right? Prior to making a higher high or a lower low, it's the pullback. Once you make a breakout move, it then becomes the aggressive entry technique. That I think is maybe a little bit inefficient. Oh, fuck off. So yeah, I think that's probably where there's like a lot of improvements to be made, or where I could probably make some improvements in my trading. So I've been playing around with that a little bit, right? The thought I'm basically going to have here is, what do I think is the best stop loss, right? Or what's the most logical stop loss? Not necessarily what's the easiest one, if that makes sense. Things don't really move in a straight line like that necessarily. Yeah, it's happened a lot, John. Right? It's been really freaking annoying. But there have been when I studied August to September, there were 12 trades that were losses that were fake outs that moved 25 points or more. That's a big number. 12 times 25, right? Times 20. That's a big number. So my data is telling me I don't really have much of a choice. Yeah, and that's a huge difference, right? And it's the most frustrating probably result, or second most frustrating. The most frustrating is being up 25 points and getting stopped out, right? Okay, we could be back to watching on these reversals here. Ooh, kind of a shitty close. And then not enough volume on ES. Yeah, so kind of my process here is week to week judge like micro details. So stuff like entry timing or position sizing, like stuff like that, right? That's maybe a little bit or like week to week. I basically want to be focusing on the details that ensure that my trading isn't noisy. So what I mean by that, right? If in one of my trades or in one of my trading weeks, I have like a $1,500 loss, well, all of a sudden, right, that one trade effectively has a much higher weighting in how my trading went that week versus any other individual outcome or decision. So I want to make sure that there aren't any like risk management, psychological technique outliers that would skew my data basically against me. So that's like the short term, week to week kind of studying. Generally, there's like some sort of target I'm working towards. So it'll be okay. This week I wanted to make sure that all my trades are less than a $500 max loss, and every entry is better than the reference price. And so usually Saturday morning, I'll go through and I'll check, okay, how many of my trades accomplish those criteria or whatever I'm looking at. And then I'm generally aiming for 90% or better on those. So I want 90% of my trades to be less than $500 max risk, or 90% of my entries to be better, right, than that blue line. On a month to month, I wouldn't necessarily say that I have like a very formal process. It's more, okay, now I've got 3 or 4 weeks of data. Can I see like a more general pattern? Is there something that's like driving me insane? Am I more stressed than I should be? Like kind of asking myself those kind of questions and then trying to find a root cause of that. Generally, stress for me in trading comes from not taking action over something I have control over. So, like last week, was very stressed when I kept getting faked out and like being annoyed. And so the thing that I had the thought in my head of, okay, I feel like I'm getting faked out. Maybe my stop loss technique isn't working the way that I expect right now. But then I didn't have a action plan on top of that. So I kept getting like confirmation bias reinforcement, right? Where it's like, okay, I think that this is an issue and then I'm dealing with the issue, but I don't have a solution to it. Pair that with like being really sick and all that kind of stuff. I think it just makes you a little bit on edge. And then yeah, look at things from there. Generally, I want to do a deep dive like once a quarter of, okay, this is what I'm doing well. These are kind of the general themes. And then I'm asking myself, was it me, the market, my technique, right? Did my execution get in the way? Whatever it might be. And then usually once a year over Christmas, I do like a full deep dive year in review with just like, Bailey's in my coffee and a bunch of ice cream and the fire roaring. And yeah, spend a week kind of like studying patterns. What am I doing well? What can I improve? Maybe where do I have blinders? And kind of spend that period from like say Boxing Day to New Year's as like the self-reflection, review, and plan the next year. I don't really necessarily do it that way. I have basically it all organized in like just a Google, what's it called, folder or like Dropbox or whatever you want to call it. I don't know what their term is. So I have them all just in there. Really, like the vast majority of the time, what I am doing is I'm watching back my trades, right? That for me is a much more valuable resource or tool. So if like I don't like something, it's kind of a blessing, it's kind of a curse, but I go stream of consciousness in here in the live stream, right? And what that means is that when I watch back my trades, I can kind of like hear my thought process out loud. and usually I get pretty embarrassed by it, or like hate the sound of my voice or whatever it is. But that for me is kind of how I review my trades, or where I find the most value in reviewing my trades. And then, if there's like a specific one I want to look up, I'll bring up my notes, right? Okay, here's how I traded, why I traded this way. Have that up on one screen, trade replay on the next, and then trying to see if my notes make sense. Honestly, this is gonna sound maybe bad as well. Um, but I feel like so much of what journaling does for me is it doesn't I mean it certainly helps reviewing, and it does all those like yeah, how different things can feel, I guess, or how quickly things can feel different. But the point of journaling for me, right, is it's almost a way of like just organizing my thoughts and clearing my head, right? So when I write down my patterns of execution, or my behavioral patterns, or um however you want to describe it, I almost like organize the way internally that I approach or view that as a problem. And so it makes attacking it, or solving it in the future, just like a little bit more organized, right? So it's like um, writing the things out, journaling my trades, and clearing my head of those ideas almost makes them like more obvious in my mind. I can like picture things easier, and then I'm able to like organize my thoughts around those rules. One of my like I really like photography. Uh, consider myself an amateur photographer. Uh, really, all that means is I spend more money on cameras than I probably should. But I love to study like old coffee table books, and old photography books, and read about these super famous photographers. And one of my favorite quotes is someone was asking a photographer why they shoot in black and white. Why don't they shoot in color? And they'd be going to these like incredible scenes that should be vibrant and all these sort of things. And their response was, when I create rules for myself and I know how to like contain my brain, then I unleash my creativity, because I now understand basically the parameters. It's like they can focus their creativity because they're only worried about composition, or they're only worried about lighting, and so they're able to refine their focus. I think ultimately that's kind of what journaling is for me, is it allows me to kind of refine my focus away from being P&L based to finding something that I can learn or improve every day. And I'm just looking for like, oh, that's kind of interesting, and just stacking up basically enough of those little reminders, and then just going through that process like it's like a filing cabinet, right? It just keeps everything organized, and it really allows me to clear my head and remove baggage. Some days better than others, but that's generally the process. Yeah, we've not missed out on anything here yet. Price is very much stalled since, we'll say, 9:45. I'm happy to be green. I don't know how aggressive I'm going to continue to be here, or how much value there is in being very aggressive still. I was very happy with, been very happy with today's trading day, all things considered. I really liked um, how deliberate and detailed that first plan was. We kind of expected all those things to happen the way that they did. And that made the trade feel very calm. Like we kind of nailed that scenario, even if we didn't necessarily make a ton of money on it. But price behaved how we expected before entry and after entry. And I love that. Oh, sorry. Yeah, tomorrow should be back to NQ1. There should be no difference. Like even if you look here, right, NQ1 is reflecting the correct price. But when you go to the short-term time frames, trading view is kind of being stupid. So tomorrow, I would think that it should be all sorted out. But yeah, NQ1 and NQZ right now are the same thing. It's just trading view is stupid in how it reflects the contract roll. Well, to be honest with you, Chris, kind of what we expected going into tomorrow, right? So tomorrow is a really big news event. The Federal Reserve is expected to cut interest rates tomorrow. So the whole market is kind of waiting for that. And then the other element here is that it's the futures roll. So today is more of a it's like a technical trade versus a speculative trade. So what I mean by that is for most institutions that are trading this product is they're not taking a directional bet here today. They're more continuing a directional bet that they have had in the past. And so they're forced to buy or sell a specific contract. So price is kind of behaving how you'd expect in that type of environment where there's really inefficient movements and kind of sloppy price discovery because no one is interested in maintaining a narrative effectively. So kind of as expected, truth be told. If it was any other day besides futures roll day going into FOMC, this would be telling me I need to be on sidelines, right? You've got no separation, no movement of price, no interest from either buyers or sellers. And it kind of seems like maybe price is stalling out. So at the very least, I'm being told I need to slow down and I probably need to expand away from like this range. So if I'm a betting man, it's 10:30, probably not getting another trade here today. Nice work, Jake. That's awesome. $400 to start the day. Can't really complain about that. Nice work, Aaron. Yeah, just kind of expecting price to stall probably for the remainder of the morning. That's okay. It happens. And everything else kind of looks like we have a bit of a stalled narrative there too. Yeah, I'm just gonna hang out. Probably, guys. Just watch for a little bit. This um I don't know, new COVID variant. I don't know how, it's ridiculous. It feels like it's a screwdriver on your sinuses. Not very fun. Sounds good, Mike. Enjoy your afternoon. Another nice, consistent day from you. So cannot complain. Well done, sir. I think tomorrow morning will be pretty busy. The problem basically about assessing volume, right, during the roll trade is a lot of it is fake, right? Kind of, or deceptive. So if I were to type in NQU, which is the September contract, right? Yesterday, this thing traded 360,000 shares, right? Or 360,000 contracts. So we still have to trade 360,000 contracts now on the December December, right? NQ. So like we basically have to trade yesterday's volume again on this thing. And so high volume or low volume is deceptive because there's a lot of forced buying and selling, right? So yesterday, the December contract traded 360,000. We have to do another 360,000 contracts prior to the September finishing its period. So it's a little bit deceptive. I would expect there to be a big change in trading volume, but because of the futures role, not because of any data necessarily. I mean, I think it's going to be a 25 basis point cut. I'd be surprised if they did more than that. I think that's what's priced in as well, or like base expectation from the market. Powell's mandate effectively has been he doesn't want to surprise markets with what he's doing. That was his whole thing over COVID. That's been his whole thing in tariffs. It's been his whole thing with the data and like the inflation metrics we were dealing with last year. So I would be surprised if he wants to do something that he hasn't really signaled in the past. There's kind of there's a part of me that thinks he might not cut interest rates out of spite tomorrow. Pretty much the only surprise I would expect. Like if that happened, I don't think I'd be too surprised. And I think he would do it out of spite. Yeah, I don't know if it would drop or if it would pop on a rate decision. It kind of feels like the 25 basis points is priced in, which would make me think that it's a sell the news event. Give us a maybe 1 or 2% pullback for a couple days and then, push back up towards all-time highs. I think a failure to cut would be the bigger upside surprise. What I'm fascinated by, I guess, is Polymarket is introducing event contracts for earnings, where it's is Apple beating EPS? Is it beating revenue? Whatever. And you can bet on those things. That for me would be a much more interesting bet to make than betting if the price would go up or down. So I would rather play that as an event contract versus position in the market. Yeah, I don't think Powell cares about the media anymore. He's made his money. And kind of a despicable volume profile there below that outlier. So I would be very surprised if I get another trigger here. I would say it's probably pretty unlikely. I might just take my money and run. So, any questions here, team? Anything you guys want to go over? I don't know. I've probably ranted and raved a lot like a lunatic here today. Probably no different than most days. But happy to answer any questions here. Otherwise, probably just going to go jump in the sauna and purge some of these toxins. I reckon I'm probably on the hopefully last 3 or 4 days of this bullshit. But I went on holiday for 6 days. I've now been sick for 8. This is the worst. And the main pain point is I want to be outside exercising, biking, running, golfing, and I'm stuck spewing mucus. I just use the desktop or the web version, sorry, of TradingView. I don't use the desktop app. I don't see how it's better or worse. Just always use the desk or the web version. Yeah, Chris. So again, the 90-minute window that I trade is from market open till about 11 a.m. Eastern. I mean, I could probably trade in the afternoons, but I don't. Again, I would recommend going through the start here section of the Discord. It's going to answer all of those questions. Yeah, unfortunately, I have tested for the Kung flu. I have tested positive for it. Yeah, it's been fun. All right, team. Final call for questions here. Final call. Thanks, Ian. Yesterday, The reason I know I'm starting to get better is my resting heart rate when I'm sleeping is kind of back to normal. That makes a big difference, right? It's kind of how you can tell. It's quite crazy. When my resting heart rate jumped by 13 beats a minute when I was sick. That's a lot. I went from like 43 to 44 average. I was doing like 56, 57, 58 while I was sleeping. Huge difference. And that's how you know you're going to get sick. Oh, buddy Logan. Buckle up, buddy. Get some triple ply. It's going to be a long one. All right, team. So yeah, saved you like always. If you have any questions, hit me up outside of market hours. I will do my best to get back to you as soon as I can. But otherwise, good little trading day here, 1-for-1. Nice little green day. Didn't really leave any money on the table. So no real complaints. And yeah, we'll be back at it again tomorrow. So have yourselves a great day. And hopefully it's a fun session. Peace.